think innovation is about breaking eggs to make an omelet. You cannot break eggs in a regulated bank. You should not break eggs.
One of the things I've always held is banks say they exist for customers, but truly they exist for regulators. You don't agree with me?
Oh no, I fully agree with you. I was just wondering, should I say that? There's reasons for that. Like my job, and to some extent, is to make people in the bank very uncomfortable. If you think that any bank would not love to make a ton of new money, you're vastly mistaken. Right? What is the non-sexy part that everyone is going to need once this gets more mainstream? Privacy is going to be the big topic going forward. And people used to think it's privacy for retail consumers. I don't necessarily think that's the issue. It's privacy for institutions.
Ladies and gentlemen, welcome to this episode of Couchonomics with Arjun. Joining me on the couch here in Dubai is someone I can call a friend. I think I've known him for about 15 years, both as a client and I guess as a friend. We meet in the conference circuit more often than we meet socially, but we do exchange our WhatsApp messages quite regularly. Two things that I love about this guy is, one, he's a pure, true sneakerhead who actually has a collection which actually is maybe 3x, 4x of the number of shoes I have, right? And secondly, what I love is that he usually has a contrarian view to most things, and he's able to wear multiple hats, not just one of a banker. And I guess that's sort of the giveaway. He does work for a bank. His name is Giovanni Everduin, and I know I have completely messed up his surname, but he's learned how to live with it. Gio, welcome to the couch.
Thanks for having me. Great to be on the couch. Pause. Man, I feel like I had to really earn my way to this couch. Like 15 years, Arjun. 15 years.
No, but the show hasn't been going on for that long. But no, you're true. I think it has taken quite a long time, right? This is, I don't know, 165th episode and so on and so forth. But I always say that there's always a right time. And I think this is perfect timing, because with everything which has been going on in the last 12 to 15 months, I think we have quite a few things to talk about, right? So Gio, I'm going to dive straight in. And I think a lot of this conversation is going to be a spillover of what we were talking last week when we were in Singapore, around Singapore Fintech Festival. Banks are talking innovation, right? I guess I've got a threefold question to you. What does the word innovation really mean for banks, right? What are they doing right? What is it that they're not doing right? And where do you see the biggest blockers, right, from banks being able to genuinely innovate in today's day and time?
Well, that's a lot to unpack. So
we have 45
let's
minutes.
start. All right. So what is innovation? I don't know the answer to that, but I'll tell you what it isn't. It isn't transformation, which I think, or digital transformation, which has become kind of such a big, bucket of what banks have been focusing on. I can tell you what I think innovation is, and I can also tell you why I think innovation is hard for banks, which kind of goes hand in hand with what I think most banks are getting wrong. So first and foremost, I think the biggest disconnect when it comes to innovation in banking is what customers, I think, expect versus what banks are actually working on behind the scenes, right? And so if you look at consumer tools, AI tools, or anything else, there's a certain standard. Fintechs have set a certain standard in user experience and capabilities and features, in the speed of releasing new features. And then when you contrast it to banks, typically you find that there's a bit of a gap. Now, why is that gap there? I think, there's a couple of really valid reasons, and there's a couple of reasons that we really have to change. The valid ones is banking is highly regulated. Mm-hmm. Right? And being highly regulated for the right reasons means there's a lot of governance. And when there's a lot of governance, it means there's a lot of bureaucracy. But that's there for a reason, because we've had several instances where I think the banking industry showed that without this governance, without the three lines of defense, without oversight, without clear regulations, things tend to go potentially really bad. Regulation is one. Now, there's two other ones. I think one is legacy systems. Often I'm surprised that the architecture that most banks operate on are still mainframe architecture, right? Mm-hmm. COBOL. And so upgrading that is very, very difficult. And then if you contrast that to some of the neobanks who can go digitally native, first principles, same with Fintechs, there's a really big lag for what banks are able to do versus someone who starts fresh and builds their own tech stack. The second thing is, outside of legacy systems, legacy data infrastructure. Data is fragmented, data is incomplete, quality of data is bad, all kinds of politics around data ownership and data governance. And so that makes it really hard to plug in something like AI. So regulations, legacy systems, legacy data. The third one, which is probably one of the most important ones for anything innovation or even transformation before that, is legacy mindsets. And what I mean by that is, I have this kind of saying that my team gets really tired of, but you can't expand on what you don't understand. And what it really means is two things. Number one, if you understand too much of a certain something, you end up making perfect the enemy of good. You get bogged down in the weeds. The flip side, which is often more the case in banking, is if you don't understand enough, it's really hard to imagine the possibilities or the opportunities. And so what do you do when you do innovation? Most organizations, banks included, ours included, you spin off either a center of excellence, right? Which is something that most consultants will advise you to do, or you move it under the innovation team, on the strategy probably, which is what we've done. And that makes perfect sense, right? To kind of build a beachhead and then slowly work on use cases and roll it out. Start small, scale up. What's the problem with that? Well, if there's no understanding or competence or buy-in at the business side, at the control functions, the support functions, board level, CEO, the risk you have is death by 1,000 POCs, right? Because you just do things for the sake of doing things. You're not really connected to the business. You're not really solving problems that people care about. And so you just end up having an incentive just to push out cool stuff. And there's nothing wrong with doing cool stuff, but it should be right, linked to something meaningful, not only for the bank internally, but also for the stakeholders, the shareholders, and ultimately for the customers.
Yeah, I get it, right? I have a saying saying, "Don't innovate the tech stack, innovate the profit pool," right? And I
I'm
think
going to steal that.
Huh?
I'm going to steal that.
You can. You're most welcome to steal. I'm just a good consultant or a bad one, whichever way. But no, I think we've got a problem. I think one of the things I have observed, both having lived on the industry side and have now sort of been back in consulting for the last 5 years, is this sort of delta of knowledge, understanding, which sits at the management and the board level, right? I think people sort of half understand concepts and ideas. They don't fully embrace it. And so therefore, as you said correctly, it sits in these shiny little parts of the organization. Too much money and time is spent on POCs, and then it gets compounded by all of that, right? Let me try and flip the story, because it's not all negative, right? Let's go back to 2020. We're at the end of 2025, right? Where have you seen a marked change in the way the industry is coped with, I guess, innovation? And again, I won't restrict it to technology-led innovation, because I think there is regulatory-led innovation. There are new business models that have emerged on the back of either customer needs or the ability to actually find a new sort of white space. How have organizations coped well? So what have they done well in terms of the last 4 to 5 years?
Well, I think for starters, as much as we were just saying that that's not necessarily the end goal, I think having the center of excellence, having heads of innovations in banks is a very big plus. Having chief AI officers in many of the larger banks, AI institutes, even if you look at JPM, I think the investment in technology first, but then also general innovation, business models, I think it has been great. I think regulatory innovation, particularly here, has been amazing. I think that a lot has already been said about it, but I'll have to highlight it. I think a lot of things here are regulatory led, which is fairly unique compared to other geographies. I genuinely also believe that capability and competence in the regulator is a massive driver for innovation, right? And I think that's one of the things that I feel the country has invested in quite a lot, and it shows, right? And it shows with this sandbox innovation first, and then build regulations on a use case basis. I think that's a great approach, and it's a very strong contrast with, I would say, other parts of the world, e.g. Europe and the US, to some extent, up until recently anyway. The other thing is, when it comes to business models, product innovation, we've had a lot of really successful fintechs, right? And I think that kind of led the path in terms of understanding. You see this industry, the fintech industry, over the last 5 years, getting to unicorn status and actually becoming serious threats partially, right, to the value chain of banks. And I think that woke up quite a few people to see that it wasn't a fad, right? Just like I believe that crypto or blockchain is not a fad. AI is not a fad. But so I think those are kind of like the things that I see where we really evolved. There is really not a bank. I go to a lot of conferences like you. There's really not a bank anymore that doesn't have a designated innovation person, an innovation team. almost every bank has a team of people sort of dedicated to AI. But here's the problem, right? Because you talked about this gap there is in terms of knowledge and understanding. And I'm going to ask you a question. And first, I'll tell you my perspective. It's really, really hard to stay on top and understand all of this stuff. Things are moving so fast. And so I feel often like between Discord calls, Twitter spaces, the timeline, meetings with people, white papers, I try to reach, well, I say reach, I try to skim research papers. It is like drinking from a fire hose, right? Just to stay on top of what is happening across multiple different things that are impacting banking. And so, you do this for a living. Like, how do you stay on top of everything?
So hold on. So I think you're bringing me to the next question, and I think I made the point at the Singapore Fintech Festival, specifically in the first 2 days, which was the Insight Forum. My view is I think we are over-intellectualizing the concepts which are going to drive change. I think it's a good idea to discuss and debate. It's always a good idea to actually triangulate, right? But unfortunately, a lot of the thought leadership is going down, into my view, into clickbaiting, which is everything is worth trillions of dollars, everything is worth billions of dollars of change, right? To grab attention, because I think even the thought leaders are fighting for that sort of mind space that their paper gets read. What I'm basically trying to say that is as follows, right? There's a lot of content which is being pushed out there for a lot of reasons, whether that's management consultants, whether there's a white papers coming out of genuine innovators, whether there are builders who want to tell the world about their fintech. I think we're losing context in some of this, right? And the way I have tried to, and trust me, I actually get a brain aneurysm every night, right? If that's even a possibility, right? And I've now started forcing myself to saying, let's take a step back, contextualize what is the problem that this is really, really solving for us in the near term, right? And have we actually thought these things through to the extent that they should have before we start to say, this is the next best thing, right? I have the same concerns with CBDCs, with stable coins, with tokenized deposits, on the AI side in terms of using, AI at the core. We've all gotten sort of we're all on this sort of wave and rides of things about how everything has got to be changed. But, people talk about stable coins and massive adoption. My question is, what happens to monetary policies of several countries? We don't have a straight answer for this, right? Retail CBDCs, does it really have a use case in every market, right? I don't know. 98% of apparently the global economy is looking at it, right? Tokenized deposits, right? There are some systemic questions which have to be asked in terms of, fine, JP Morgan's doing something awesome and DBS has partnered up with them and all of this stuff is great. But, have you really thought through what needs to happen? This whole concept, finance is going on chain, right? Man, the entire legal infrastructure and judicial system sits very much in the offline world. The two have to be brought together. So I do think that there will come a time very, very soon that a number of people are just going to say, okay, hold on. I think we're getting too far ahead of ourselves. I think we just need to contextualize. And I do think a role will be played by the regulators, right? I think the regulators will say, slow down, because we're just taking too much exposure to ideas, and we cannot continue to just experiment for the sake of experimenting, right? So let's kind of prioritize. And this is where I'll give you my second quote, which is, I personally believe regulation in the short term, maybe in the long term, will actually become a catalyst for innovation, right? Because I do think that a couple of things we're not solving for. One, I'll give you an example. So we're moving to everything real time, everything AI, agentic. Scams have hit $1 trillion, right? We spoke briefly before we started. I think that $1 trillion is underreported, right? Because a lot of people who got scammed will never report. If the scam continues to grow at the rate it is, it'll bring the future of finance to a standstill. Because let's be honest, there are only 19 countries in the world whose GDP exceeds $1 trillion, okay? So we're talking some big stuff. So what am I going with this? I think there is a moment in time that we all need to kind of take a step back and see, is all this innovation really going to deliver hard value? Or are we just talking for the sake of talking? I think a lot of it will survive. A lot of it will get reprioritized. I think the regulator will come in and possibly, guide us through it. And I don't think that happens at the cost of lack of innovation. I personally don't think so.
So kind of like what I would hear if I was still a consultant, what I would hear you say really is you're talking about kind of like regulatory led focused innovation, right? As opposed to this kind of like, let's do everything at the same time, boil the ocean. And every week there's a new buzzword. I don't know if you saw this video from Elon with Jensen, I think it was yesterday or the day before, where he talked about a bazillion trillion dollars worth of data center. You should watch it. And he was kind of, he was kind of like being cheeky, but at the same time, I thought it was a really contemporary reflection on exactly what you said, right? Have we lost the plot in terms of context? So many things that you said there. Stable coins, I think there's places in the world where there's a real use case. And there's Dev Connect happening right now, the big ETH conference in Argentina. I have a lot of friends who are there. And so I read a little bit up on Argentina, and everyone's telling me like, oh, the adoption is so high. Well, the adoption is high. Why? Because of volatility, right? Capital flight. And so people want to save or get paid in USD, in digital dollars, really, because it's difficult to get physical dollars. And when my understanding is 30% of all wallets there actually hold stable coins. So when there's that level of adoption, it makes sense to facilitate payments, right? Because it becomes a main store of value. Other places, you could arguably say, do we need them? Do we need this many of them? You and I have had this conversation before. The answer, I think, is very obviously no, we don't need that many of them unless you're the US Treasury. Second thing is, do you need as many local ones? But to your point about monetary policy, well, yeah, you want to have a local one at least because you want to make sure that you still have some level of influence over this digital economy, right? Now, how many local ones do you need? That's a whole different conversation we're not going to get into right now. In my mind, stables and to some extent tokenized deposits, it's just at the end of the day, walled gardens. The same thing that happened with social media. It's people trying to have control and governance over ecosystems that they can, extract value from. And I don't mean that in a negative way, because that's what corporations do, right? Where most of them are for profit. And so that's the objective. Now, all of it together, I think the future will be hybrid. This is my kind of like hot take. The future will be hybrid, on-chain, off-chain. I think there's still, one of the biggest problems for DeFi and institutional DeFi is what? The lack of oracles, right? It's really difficult to get that right. And so we're still dependent effectively on Bloomberg for everything. Great startup idea. Try to disrupt Bloomberg. And so I think it's really difficult for banks and organizations to figure out what is that focus within the sea of possibility. My personal take on this, and I know it's not very scalable, I like to go to, I call the trenches, where the builders and the doers are on the DeFi side, and figure out what are you building? Why are you building it, right? How are you building it? What's the problem you see that you're solving for? Because they often have a fairly, and it's a good thing, but they often have a simplistic or simplified view on TradFi. TradFi is bad, boring, inefficient. And to an extent, that's probably true, but there's also very valid reasons for it.
And that's what I was going to say. Yeah. There's valid reasons why TradFi is like
and that. It's not like we don't know, right? This is what I usually tell people. When I sit at these, like sometimes on the judge at these pitching contexts, people go like, oh, banking is broken. I'm like, we know, right? We know sometimes, we know what the problem is. We also know why it's there. And there's a reason we haven't been able to solve it so far. If you think that any bank would not love to make a ton of new money, you're vastly mistaken, right? That's literally what banks do. And so when we don't, you have to assume there's very valid reasons for it. Often regulatory, sometimes systems, sometimes whatever it may be. And so I like to be there in the trenches when I see what they're building and how they're building it. And then my job, I guess, is to kind of translate that, or to your point, contextualize that and say, well, what does that really mean? What problem could this realistically solve? And as opposed to having a technology and desperately, or a solution and desperately looking for a problem, I have problems in my head that I know we need to solve. I'm looking at technologies that can help us solve it. And, like I said before, in my mind, that's going to be hybrid. I doubt it's going to be either or. I hear all these stories about some of the middlemen, Visa, MasterCard, right? What's going to happen to them? I think they're going to do exactly what they've been doing, just in a hybrid fashion. They're going to own the rails. That will be the logical thing. Why? Because you still need trust, right? You still need regulatory compliance. Regulators, countries love them for many different reasons. They've been there for a long time. And so this notion that you can just take a couple of bits of technology and just supplant a massive financial ecosystem that's been there for a very, very long time, I don't necessarily buy into that, but I do think you can significantly enhance it and to some extent evolve it.
And accelerate it.
And
right?
accelerate it,
And
100%.
accelerate it. So I'll say something and please challenge, right? So stable coins, cross-border payments, use case works, right? I just want a simple answer. It costs us 8.5% to move $200 in sub-Saharan Africa. Just tell me what that 8.5% will look like because we start using stable coins, right? To me, that's kind of the context that I'm more interested in. And then I get interested in the technology that underpins it, the regulatory challenges, the monetary policy issues which might exist, so on and so forth, right?
Yeah, so what you're saying is keep it under the hood.
Yeah.
It's a means to an end, right?
Totally.
Like, when you have to explain the tech first and not the use case, then we already lost the plot.
And this was a very interesting discussion that I've had with a number of regulators. And this is where I think a lot of the regulators, and I won't use the word struggle, but do get challenges. They start looking at the underlying technology when actually what they should be looking at is the use case of that technology, right? But to be fair on them, this technology is moving so quickly that if they don't actually understand the technology to that large extent, the use case becomes redundant quite quickly. I'll give you an example, right? And I for one, I'm very happy to see that TradFi, DeFi is kind of converging. You use the word hybrid, which is a much better word than that, right? Let's go back 10 years ago, 15 years ago, because I'm like an old dog, right? So I was there when Fintech came around, right? I was in payments at that time. We didn't have the word embedded finance, Fintech, none of that existed, right? And Fintech's original, I guess, avatar was always about enabling banks to be better, right? Banks didn't want to adopt it because they had issues with fintechs not being enterprise grade. They didn't believe that they'd be around for 10 years. They believed that there'd be too much risk that they would be taking in terms of working with these startups. So they got a bit shunned away. So we saw this sort of second wave of fintechs which said, okay, we're going to come after you guys, right? And whether they were digital banks, whether they were BNPL players, right? But most of them came with this versus attitude, right? And that was great. Why? Because that made the banks wake up. Today, our banks offering much better UI, UX, their product ranges have improved, et cetera, et cetera. Might not be all out there because, as you said, they're built on legacy systems, but there was a wake-up call, right? What has happened over the last 10 years, in my view, is fintech has gone from being a versus to an enabler, and I'm talking fintech 1.0 or 2.0, I'm not even talking about the DeFi world, is increasingly now becoming infrastructure, right? The fintechs that excite me most are the ones who are solving the infrastructure problem. It's about how do you actually accelerate wealth management for the many, right? And banks are realizing, or capital market players are realizing, that they cannot build their existing organic system. So they're going out to infrastructure fintechs and saying, come work with us. We'll bung you into our sort of, our traditional environment. We have APIs and we'll do all that kind of creative stuff, but we can go to market much quicker with a fresh product to a new customer segment, giving them new experiences. And I think that it's kind of that and conversation, right? Which I think excites me most because these creation of parallel worlds, right? And a few people sitting on this corner saying, oh, we're incredibly well funded, breaking through and disrupting and smacking the banking sector around, I don't think it works because one of the things I've always held is banks say they exist for customers, but truly they exist for regulators. You don't agree with me?
Oh no, I fully agree with you. I was just wondering, should I say that? No, look. Yes, I fully agree, and there's reasons for that. This is the thing. I think it's one of those things where I have to say that you have to nuance that a little bit. But yeah, actually, as a punchline, that's a perfectly valid statement.
I'm not supposed to do so much talking on my own podcast.
No,
by
but
the way. Questions are for you.
Well, look, and I think those are really valid observations. One of the things that I find interesting when I look at between the DeFi and the TradFi world, particularly the on-chain and the off-chain world, is that you're right. Like it's the infrastructure that makes most sense on the TradFi side because you have the apps, right, or products, whatever. On the DeFi side, it's the opposite. Everyone is focusing on infrastructure. I'm like, well, where's the applications?
Yeah.
right? I hope nobody takes offense, but we really don't need another L2 or L3 or, I think we have enough of that right now. So who's building all the apps? And the model that I see is a lot of these well-funded protocols, because there's a lot of VC money floating around for many different reasons. It's very attractive to invest in some of these protocols, token issuance for one. But when you do that, you get these very well-funded protocols that then start thinking about, well, we have capital, what should we do? Well, maybe we should issue grants or fund startups to build products, right? To actually get you the traction. And so I think we both have opposing problems, which kind of tells me that this convergence, as you call it, or the hybrid model, makes so much sense. You have infrastructure, high-tech, next-gen infrastructure looking for apps and products. And you have existing apps and products and a user base looking for probably an upgrade to high-tech infrastructure. That's really where I think the future should lie.
And this is where I think the regulator has an interesting role to play, which is my view around why regulation can be the catalyst of innovation, because I think they normalize things, at least in the near term it does, right? Having a fight against a regulator, I think, is both futile and foolish.
100%. I'll say this, and it's something this is based on a couple of experiences I had over the last maybe couple of weeks. I spent quite a bit of time with some of the folks at Vara, with the Fintech team in the central bank, with the ADGM team. And, the conversations are incredibly interesting because not just regulating, they're actually connecting an ecosystem, right? The amount of people, they're like, oh, you should talk to so-and-so company. They're building something really interesting. Oh, we saw this use case. And it's like, wow, the level of strategic thinking at the country level to push innovation, connect an ecosystem, and actually forge partnerships. And by the way, that's for me is the answer to what you said earlier. We call it, in CBI, we call it partnership-driven innovation. Fintechs, banks, whoever it be, embedded finance, it's all about partnerships. There are things that they're really good at, whoever they are. There are things that we're really good at, whoever we are. And again, the future is hybrid, right? At first, it's not zero sum. And second of all, the market is big enough for all of us.
And I'll end this one last note on regulators playing a key role. Two of the most impressive market development efforts in the world for me are UPI in India and PIX in Brazil. And both of them or Aadhaar in India, which was obviously the digital identity infrastructure, they actually came out of the regulators, right? And now they've created an entire ecosystem which has flourished on top of that, whether they're fintechs or banks, right? And I think we're going to see more and more of what you've said. Let me bring it back, CBIX.
CBIX.
What is it?
I have no idea.
That'd be rewarding.
CBIX. CBIX is basically our 100% owned subsidiary by the bank, licensed in DIFC. It's two things, really. It's an innovation lab, and it's a corporate VC for all of our sins. But there's actually logic to that, right? The innovation lab, and I'll talk a little bit later about why we spun it off, and I'm sure you're going to ask me, but the innovation lab is like a lab. It's like a sandbox where we can do experiments, where we can build use cases, do prototyping, get customer feedback without necessarily having to go through all of the bureaucracy that we have to go through. And again, the bureaucracy is there for a reason, right? It's there to ensure that the financial system and the stability of the country is protected. And so because of that, it's very hard to do true innovation inside a highly regulated environment. We looked at the market. There's a couple of examples. SC Ventures for me is a great example of how you can do this. And so we realized, okay, we tried it internally, but we have to move it out. Different mindset, different systems, different approach, more of a startup way of doing things. That's the innovation side, and that's also where we can then start building or at least experimenting with use cases for crypto and everything else.
So I've got a quick question before you go further. So once you've experimented, how you take it over the wall into the bank?
The same way you would have done it if it would have been under my traditional hat, which is Chief Strategy and Innovation Officer, which is you then go through the committees, right, and the reviews and everything else. Now you make sure that you have the control functions already embedded on the prototype side. So what you don't do is just build something and then go. So you build something that everyone is sort of like, yeah, in principle this works. Client kind of like it makes sense. We have a commercial model, but then it's almost like you fast track innovation. So what you do is you nurture the seed first until it's like a tiny little plant, and then you take the plant in front of the committee and go like, well, it already has some fruits, right? Here's what it looks like. Makes it a lot easier than to shoot at something that's very abstract and conceptual. The second thing is, I think innovation is about breaking eggs to make an omelet. Mm-hmm. You cannot break eggs in a regulated bank. You should not break eggs.
I was going to say
in a regulated bank.
Break eggs, yeah.
Fundamentally, you should not. Right? My job, and to some extent, is to make people in the bank very uncomfortable, but not too uncomfortable, right? And so if you want to use this break a few eggs and make an omelet, we realize we have to move it outside of the bank, and doing that then allows us to take a little bit more, I don't want to say take more risk. I think we have a different risk appetite framework, right? Because it doesn't necessarily touch the clients directly, is not in production. It's just prototypes we're building to see if something would work or not work. A/B testing, these kind of things. Now, when you start partnering with fintechs or any other companies on innovation, you tend to see founders in action. You tend to see teams in action. You see the technology in action. You become a client, or maybe you become a banking partner from a banking as a service perspective, where you help them go to market. What we realize is that is probably 60-70% of DD, due diligence, right, in any kind of venture investment scenario. And so we naturally started investing from that perspective. Like, oh, we've been working with this team. We really like the product. We see a lot of opportunity. They're doing around, why don't we actually invest? And that's where the CVC part comes from. And it's interesting, I have to say this, shout out to RTD Little, because 3.5 years ago, I think,
Yep.
we worked very closely with, yourself and the RTD Little team on this new strategy, right? Pivoting away from traditional banking, looking for alternative revenue streams, all of the good stuff. And I think that was really the birthplace for partnership-driven innovation. It was the birthplace for doing banking as a service, using fintech as a service internally, potentially embedded finance, experimenting, setting up a lab, and then also potentially investing, right? And so all of those pieces, it took a little bit of time, as it should, but they finally came together in CBIX. And
Yeah,
that's
and
really what it
and
is.
kudos to you guys that you at least followed through and sort of delivered it, right? So I have a follow-up question, right? I think we are sometimes too critical about what banks do well and they don't do well. So what should the fintechs or the tech startups do differently to make them more palatable? I don't have a better word than palatable, right? To banks, to be able to collaborate with banks. Because I think a lot of the fintechs basically kind of have this attitude as, take it or leave it kind of attitude, right? They obviously then come around, but they could frame the narrative a little bit better up front. What should they do differently?
I mean, genuinely, I work with a lot of founders and I'm in these pitch competition, and usually the feedback I give people is try to understand your audience first and foremost. By the way, it's the same in consulting, right? Like, know who's in the room, know what drives them, know what their problems are, and then kind of pitch towards that, as opposed to here's something that I need you to have or want. That usually doesn't really work. So make it relatable. I think one of the things that, genuinely speaking, I feel people don't really have that much is the ability to tell stories. Right? And narrative matters. It matters a lot. Traction matters, great product matters, narrative matters a lot, particularly when it comes to startups and founders. I'll step away from fintechs. I'm going to go, because my thing is the DeFi side, so I'm going to go a little bit more on the crypto side. Mm-hmm. The number one thing is speak common English. For the love of God, stop talking about native yield-bearing stables with composability and interoperability protocols and, vaults. You lose half the room immediately. And so I always feel like,
half, maybe 90%.
90% of the room. If your objective is, right, to sell a group of bankers or, traditional finance people, speak their language, learn their language, speak their language. And once you do that, actually things become a little bit easier, because most bankers, me included, right, we will volunteer our problems with you. You don't think we want solutions? We want solutions, right? So I tell you my problems, and then you can figure out a way how whatever your new shiny technology is can actually help me. And if it can help me, I'm obviously very open to explore that, provided that it meets regulatory requirements and a couple of other things, right? Capacity, legacy systems, APIs, integration, all of that stuff. So I think one thing that they can do better is that, number one, understand your audience and speak their language. The second thing, and this is specifically on the DeFi side, the blockchain side, not so much on the fintech side. I think they've done a much better job on this. Is like, why do your engineers hate customers? Why do you build horrible user experience? I would consider myself a decent power user of DeFi applications across multiple different chains. And it surprises me how complicated it is. Now, that's horrible from a user perspective, but most people who kind of go into that space are fairly well educated, so that's okay. It's right by developers, for developers. But when you pitch that same, tech stack and that experience to a bank, who, by the way, even if they don't have it themselves, they're used to it now from fintechs, right? Because we're all users of fintechs. I feel like that's the second thing where people can really, you have to really think about who are these end users. You're talking about mass retail. Well, guess what? There's standards in how you service mass retail. And I think to the compliment of most of the fintechs, I think they set a really high baseline in terms of how you do it.
No, agreed with you. So let me circle right back to you guys, right? So there's so many competing innovative ideas which all potentially have a sizable impact on your business. There's AI in its various variants, or AI in its various variants. Here makes sense. You've got digital assets. Slash DeFi. You've got tokenization, which is part of digital assets. It's capturing everybody's imagination. Obviously, it's being backed by the government in this part of the world, certain use cases. And then we obviously have embedded finance beyond just embedding payments and BNPL, because it's finding its own life, right? So three questions. One, how do you go about prioritizing time, effort, money across possibly all competing? And yes, there's a level of convergence, overlap with all of this stuff because it fuels each other. But there is a certain level of saying, I'm doubling down here versus there. Secondly is, how do you not waste too much time on just the narrative, which gets quite confusing, and over-intellectualizing it and saying, let's take an evolutionary approach to this stuff, even though outcome could be revolutionary. And I guess the third part is, how do you keep your team grounded?
The last one is the most difficult one because I'm not grounded. I get super excited with technology. I'm not gonna lie, I get super excited with technology, and so when I see something cool, I'm like, ooh, and then I really have to like reflect and go like, okay, wait, let's think this through, right? What do we have in the pipeline? Where does this fit? Look, it's exactly what you said. You have to prioritize, and priority used to be a singular word, right? It was never about priorities. It was about priority, and so right now, if you think about it in the scheme of most banks, the priorities outside of servicing your existing clients and enhancing those services, being regulatory compliant, right, is taking up a lot of capacity in banks. And now you have all of this innovation stuff that all of a sudden needs to be done, which is completely new to most people. And now also for the innovation teams, we have to not just build innovation use cases, we have to educate everyone else in the bank, which, mind you, takes a lot of time and effort. We focus, and I think that's a model that works well for us. We focus on a couple of different things. One is what directly drives the strategy of the bank, which is kind of like a consulting thing to say, but it is also very much true, right? Like, we have objectives. Most of them are financial. Some of them are regulatory compliance related. Where can we actually achieve these faster or better through technology, innovation? The second thing is, does it allow us to do something we weren't able to do before? A product, a service, enter a market. And then the third one is kind of discretionary. Is it a cool thing that we think longer term, right? Is it like a moonshot of sorts where we feel like this is where the industry is going to go, and it makes sense for us to kind of invest time to understand what the technology is, at least at a very nascent level, so we can start thinking ahead and figure out what's going to happen. There's no playbook. I don't have like I don't have an AI model that weighs each of these. It's just kind of intuition, which I think is the key driver for most things anyway.
No, I agree with you. And I don't know if there is a playbook that someone can write because of the fact that things shift so quickly. I do think that there is some level of rational decision making where you've said, which is, anchor it back to where are we heading as a business. But at the same time, I think innovation is happening at such a high speed and velocity that I think it's also incumbent on people like you to go back into the industry and saying, hey, the strategy says this, but when we wrote that strategy, a lot of this stuff didn't exist. I think we need to come back. And I think one of the challenges you have as chief strategy officer, and even as consulting firms like ours, which is there is a certain level of strategy which needs reiteration at a more frequent pace than it would have historically, right? So some of those strategies can be longer horizon, right? And I usually see that as the direction of travel kind of conversation. But then there are things underneath, which typically where you had 2-year horizons, which might actually now be sitting on 6-month, 9-month horizons, and then that iterative, and your view, 3 months, I'm willing to buy that. Let me pick on something that you wrote on a LinkedIn post following our trip to SFF. You basically talked about tokenization and stablecoins. And I think, if I'm not wrong, please correct me, you said a lot of us are misunderstanding it, or it's being sold to us in a manner that is not accurate, if I may use that term. I'm paraphrasing.
Yeah, I think what I said was something around, first of all, stables and tokenization are the number one conversation in every room. And then the
Agreed.
second thing is, it's still very much misunderstood or misrepresented.
Misrepresented, right.
All right.
So what do you mean?
I think misunderstood, we talked about this actually a little bit earlier, right? This notion I'm going to use your language again, to contextualize it. Like, what are the problems we're solving for? What does this future look like? Right, everyone's going to have their own stable coin, and then what? And to your point, right, what does it actually solve? Okay, in Argentina, it solves a real use case.
Yep.
Does it solve the same use case here? Potentially not. Does it solve a different use case? Maybe. But what does that mean? And once everyone has their own stable coin, and everyone has their own tokenized deposit token, then what? Right? You have a massively fragmented financial system. Then interoperability will become a massive thing. And you get all these consultancies who start selling composability and interoperability services, right? Kind of like APIs over the last 10 years. So I feel like there's a lot of people, and again, I don't blame them, because it is drinking from a fire hose if you want to stay on top of it. So then where do you get your information? You either get it from traditional news, and these days, particularly when it comes to things like tokenization, it moves so fast, in my opinion. If you're not on crypto Twitter, which is not a different Twitter, it's just, right? But if you're on the crypto community on Twitter, on the timeline, if you get your news from Bloomberg, by the time you see it on Bloomberg, you just get a headline from someone who may or may not understand the technology themselves very much, right? And so then you just adopt and you become, I feel like a lot of people just talk about it at a very high level without ever having to go into detail. Now, I'm not saying that everyone has to read the Bitcoin white paper, though I think you probably should, right? I really think you should. A, is because it's written in a really digestible way, and B, it will give you a very simple foundation of what I consider blockchain primitives. And you need to understand that to understand why stables could, potentially, in certain cases, be a great solution. The second thing is misrepresentation. I think this is the case with everything. Whenever something is hot, whether it's AI, whether it's tokenization, there will be a lot of players popping up that are selling what I would consider fluff. And they're selling fluff because they're betting on information asymmetry, right? The people that are buying it have been told by their boards, oh, we need this. There's not necessarily a lot of understanding. And then you go in the market and you find companies that are catering for that. And they know just enough to be slightly smarter than you are when it comes to the subject, right? And so, and that is horrible, because you talked about scammers before, but this is a little bit what then kind of revalidates this notion, because people get a bad experience, they get burned, and then it becomes, oh, see, we shouldn't move into this space. It's not mature. Well, guess what? It is not mature yet. It is developing in front of our eyes, right? And so there are going to be cases of things that don't go so well. Tokenization is an interesting one. I feel like I have to say this because I wrote a little bit about tokenization in the past too, right? Especially on RWAs, real-world assets.
Real-world assets.
Again, like we as CBI, we are a partner to Plume. Plume is, in my opinion, one of the most exciting companies building in that space. They set up Ascent, which is the world's first ever, let me plug it right, the world's first ever RWA accelerator. And we're a part of that. Why? Because we want to see what people are really, really building, what makes sense. And there's amazing stuff being built, from collectibles, marketplaces, to other things, obviously capital markets. Real estate for me is interesting because I think it's digestible. People understand it, right? Everyone understands this notion of fractionalized real estate. In fact, we've had Fintechs who did that before you'd call it tokenization. What I usually say is, until you fix the secondary market and liquidity,
yes,
I don't necessarily...
And the legality.
The legality, which, by the way, this country has done a tremendous
job
on fixing the legalities around that. But you got to have the liquidity and you got to have the secondary market volume, because otherwise, as I call it, right, you're taking a liquid asset and making it fractionally illiquid.
Yep. And within walled gardens.
Within walled gardens,
Yeah.
right? It literally... And if you think about it from a blockchain primitive perspective, or Satoshis or the cypherpunks manifesto, that's literally the opposite of what it's meant to be. Now, I would arguably say getting large institutions on chain is probably not what these guys had in mind in the first place. And there was this interesting notion, debate in the last week or so. I don't know if you follow the privacy debate, Zcash, but there's this notion that Bitcoin has become infiltrated by large institutions.
Well, I've been reading about it. I don't know how to follow it. I don't have a point of view on it, but yes, I do agree. So tokenization, I do appreciate there is a level of misinterpretation. The question then is, I sort of circle back. How do you guys as a bank, right, not you as an individual, then take all of this, because you have a role to play, right? And does your size and scale work to your benefit? Yes. Right? Talk to me a little bit about that.
I think when you're a smaller bank, comparatively smaller bank, right? We're not Emerson BD or FAB size. So when you're a smaller bank, there's a couple of things that you have going for you. Number one, typically, hopefully, in our case, definitely less bureaucracy, right? Easier to get to the CEO, to the board, from my perspective, or even for the teams to get to like the EMC, the management team. Decision making is just much, much faster. The second thing is I think you tend to have more to gain than to lose, which is a good mindset, which is the founder mindset. And the third thing is it allows you, well, maybe it doesn't necessarily allow you have more of a burning platform to stay relevant, right? In a ever evolving and competitive marketplace. Like this is a highly overbanked market, I think, if you compare the number of banks versus the number of customers you would have. And so to stay relevant, or forget staying relevant, to even want to win, you have to adopt a very different mindset. It's hard when you can't compete on price or on skill, right? Which probably goes for a lot of banks in this part of the world. There's only a few banks that are really able to dominate on those criteria, so you have to do something different. So yeah, being a smaller bank has helped, does help. It also allows us to focus not necessarily on some of the more obvious plays, and I say obvious plays not as a negative thing. That needs to happen. It drives adoption, right? But it doesn't make necessarily sense for our bank to go into brokerage, buy, hold, sell, buy, hold, transfer, crypto. Buy, hold, crypto, actually, I think for the most part. I don't think there's transfer. Buy, hold, sell, crypto. It doesn't necessarily make sense because to do that, you would need to have distribution already, right? And also, I think it's one of those, you don't need 25 players in the market who are doing this. But what we can do is we can kind of observe and say, okay, we see all these banks going into this. This bank is going to tokenization. This other bank is now doing custody. What are the picks and shovels? What is the infrastructure? What is the non-sexy part that everyone is going to need, right? Once this gets more mainstream, when you really want to move as much as you can on chain, assuming that that's what we should be doing. I think we should. But assuming that that's what we should be doing. So what is the underlying infrastructure stuff where you can play a role that you don't see other people going for? And that's the stuff that we try to focus on. So one major thing, if I can say, I just have to make a plug for privacy. I think privacy is going to be the big topic going forward. And people used to think it's privacy for retail consumers. I don't necessarily think that's the issue. It's privacy for institutions, right? Moving finance on chain for large institutions, market makers, hedge funds, anyone moving large sums around, you will need privacy. Being on a public blockchain, I don't necessarily think that's a problem, but it has to have a native privacy protocol embedded. So at the very least, the transactions are not visible for everyone. And I usually tell people this, like, if based on your name, Arjun, right? Kind of like how I can find you on LinkedIn. If I can find your bank account or your bank accounts and see every transaction that you've ever made in your life, you probably would not be very comfortable with that. And that's sort of what having a wallet on chain right now is, right? Unless you resort to some less desirable ways of obfuscating that.
Yeah, and it's very interesting you say that, and I'm not quite sure if I'm connecting this correctly, but one of the things, at least my pattern of thinking over the last 3 to 6 months, has been that we're obsessing over rails when actually we should be obsessing over identity, right? And I think privacy is definitely either a subset or something which is the other side of the coin of that identity, right? I think identity will become the control plane, right, rather than the rails, because I think as people will build rails, we will find the answer to interoperability. I think the question is the policy in terms of who can do when, what, and with what, which is going to be driven by identity. I don't know if enough is being done in that space. At least it's not exposed to me, but Maybe there is, maybe it isn't. I've got two last questions. I know
Yeah.
I've kept you there. So the innovator community comes together quite often, right? They talk, they learn. Okay. Increasingly, the banking community is now started to sort of cohabitate themselves,
The suits have
engage.
come.
Right. They've started talking to each other, formal, informally. Is the incumbent world coming together often enough and talking about what all this disruption really means for them? Or is that still being led by the regulator will tell us?
No, I'd like to think that no, I'm not going to say I like to think. No. The incumbents are getting together.
Okay.
The incumbents are talking. They are understanding that the tides are changing, and they're trying to figure out how to prepare for that. I think people are swapping notes. I'm in more and more events, and I'm assuming so are you. Roundtables, Chatham House rules. So we're not going to talk about those, but where people are basically swapping stories about how are they approaching this, what works, what doesn't work. Often, and this is great, at least here, the regulator is involved in those conversations, right? And so I think there is more and more an understanding. I think the difference right now is that people understand that change is real and it's coming, right? There's no longer this idea of, let's just hope it just goes away. It's not going to go away. It's here to stay in one way, shape, or form. And so to really leverage it, I think you need to understand it. And I think this is something we have to do together because, like I said, it's coming for all of us, right? And so, no, I think people are talking. I think there's quite a few events, big conferences even, where people get together and speak about these things. What I would like to see a little bit more of personally is, this hybrid world. I'd like to see more. I think right now, the two worlds that have come together quite well is the fintech world and the traditional institutional world. I think the blockchain world needs to kind of get in there. And not the blockchain fintech world, because that's a different world. I'm talking about the blockchain builders, the trenches, right? Get those three groups together, because there's actually a lot of problems you can solve on all three sides of, well, it's not a coin. A coin doesn't have three sides. But on everyone's perspective, there's things that you can actually solve. And so that's my take.
So let me try and make that a two-sided coin, right? So I'm not wearing that T-shirt. I should have worn it. I actually wear a T-shirt which says crypto, just like fintech, but with lasers, right? And the point I'm having a go at it, right? I actually still struggle with the crypto world, or as you call the builder world, wanting to see themselves any different than fintech 1.0, 2.0, right? To me, if I take a step back and I'm a simple human being, it's all financial technology, right? It's about technology enabling financial services, some in a more radical manner than others. There was incrementalism. Now we're heading towards more, if I may say, exponentialism, if that is a word. But at the end of the day, I think if these two communities of builders can come together, because see, I'm working with a number of fintech 1.0 who want to use solutions that are coming out of the DeFi world, right? Whether it's starting with CBDCs and stablecoins and staking and all of that kind of good stuff, which is trying to get mainstream. I think it becomes easier. Question, sorry, I know it was a statement. Do you see these as two different worlds?
Yes.
And why?
That's a difficult one. You familiar with Star Wars?
Very much so.
There we go. All right. So you have Star Wars and you have the Rebels, right? If you take that, you have the Empire, you have the Rebels, and then at some point you have a spin-off of the Rebels who feel that the Rebels have become the new Empire, right? And then the new Rebels will have a spin-off of the Rebels who feel like the Rebels that were fighting the old Empire have now become the Empire, and the spin-off that came out of that has now become the newer Empire. And so I think if you compare those, that's exactly how I look at it. You have traditional finance, you have fintech, what you call 1.0 or 2.0, and then you had a number of disillusioned people come out of that saying, we're going to build a whole new utopia. It's broken, right? Finance is broken, fintech is broken, we're going to completely change the world. And because of that, they feel very different from fintech. I think a lot of them are coming to term now and realizing as they mature, well, actually, we are fintechs. We have to think slightly different. We need these institutions that we were initially railing against. But I think it's the circle of life, right? You start by it's almost, you have this utopian view that you're going to completely change the world, and then slowly but steadily you realize that it's not that easy to do that. Another perfect example of this is DAOs, right? Decentralized autonomous organizations. I'm part of a few, and almost all of them start with this like, oh, we're going to be like the most purest form of governing. And then guess what? Over time, you have a council, because you realize it's actually really, really difficult when everyone has a say. And most people don't actually want to vote, by the way, right? So now you get a council, elected government of sorts. Now that council will then inevitably get someone who chairs that council to actually run execution of whatever the council decides. So you just replicated the archaic form of government that you were railing against, because you went down a path where you naturally understood that there's reasons why these governance forms are in place. And I think the same thing happened with on-chain, off-chain. People are understanding like, well, actually it's not that easy. Just because I have a great solution that works in isolation here doesn't necessarily mean I can just, that regulators will allow me or countries will allow me, or that clients, retail customers actually want this at the trade-offs that you're offering it. Because guess what? DeFi is great if you know what you're doing. It's also a very scary and dangerous place for people who don't.
Agreed. Gio, thanks a lot.
Before we go, I have to give you something.
Oh, God. All right.
Yes. All right. So, because I know you're talking about my sneakers, but you're a sneakerhead too, right? There we go.
That's very nice of you.
Yeah.
Have I got a pair of sneakers now?
You will
Well,
have
we
a pair.
must unbox it on the show then. Thank you, sir.
So this is the boxes from the CBIX launch event, and
Oh,
it has
wow.
a couple of small little goodies.
And I'm sorry, apologies I couldn't make it. I was out of town. Thank you for the invite, though. Oh, God. How do you know my shoe size? You don't, right? You guessed.
I've been in your house,
Ah, yes.
and I'm very perceptive.
Oh, these are lovely. And they've got... Oh, this is so nice of you, man.
Yeah.
That is really kind of you.
You're most
Right.
welcome. I have a guy in Jakarta who does most of my customs.
That is
So-
so kind of you.
Yeah.
It says Couchonomics with Arjun, right? Oh, that's so very nice of you. Thanks a lot, mate.
Thanks for
Appreciate
having me.
that. I see there's a pair of socks too.
Yes.
That is even better. And there's some more goodies.
And there's a candle,
Oh,
and-
there's a
yeah,
candlestick,
yeah.
which I will pass to my wife.
Yeah.
But this is so kind of you, man. Thanks a lot. I really appreciate it. I will definitely wear it very soon. Maybe the next time I'm at a conference.
Abu Dhabi Finance Week.
Done. That's my promise to you. I will wear that, and I'll give this a shout out. But Gio, thanks a lot for coming in. I think this was one of the easiest conversations I've ever had. We are not going to wait another 4 years before you come back on, for sure. Best of luck with CBIX. I'm sure we'll meet at Abu Dhabi Finance Week and then again and somewhere again and so on and so forth. But one thing you and me definitely need to do is, I think after our SFF experience last year, this year, I think for next year's event, I think we want to take a bigger and more impactful delegation out of this part of the world.
Yep.
Because I do think building these bridges is going to benefit everybody, whether it's Singapore or Asia, and I think ourselves in the Middle East.
Sounds like a plan. Thanks
All
for
right.
having me.
Thank you. So, ladies and gentlemen, that was Giovanni Everduin, who is the Chief Strategy Officer and Head of Innovation for CBI. He's just started something called CBIX. Do look them up. They're both an innovation hub and, as he said, a corporate venture capital arm of the bank. With that, I'll say goodbye. I'll see you next week. Bye-bye.